welcome to Nextgen Nordics 2022. Kindly joining me now in the studio is Ville Sointu from Nordea. Hello Ville, it's great to see you again. Thanks for joining us.
Thank you, my pleasure.
Now, I've just watched a very exciting and lively debate on stage around CBDCs, and that's what I want to talk to you about now. I want to start off by looking at where we're up to with CBDCs and what were the benefits that got us to that point.
Sure. I think what we're seeing right now, a lot right now, is central banks basically trying to figure out what is it, why should we do it, what are the things that we need to avoid in order to disrupt in order not to disrupt the existing system, and what are the goals of these digital currency initiatives from central banks. Different central banks are taking a little bit of a different speed in this. So I'm personally working with the European Central Bank on the Market Advisor Group, where we are taking a very long-term design phase. So we're looking 2 years of design for the digital euro, after which the decisions are going to be made afterwards. Then in the Nordic specifically, we're seeing, of course, as we know, Riksbank has been experimenting with the e-krona already quite extensively. We're seeing similar activity with the other Nordic central banks as well. So yeah, a lot of questions being asked and hopefully answers being found quite soon. The reason why it's happening is that, which we also discussed on the panel quite a bit, is that there has been this wave of digital currency and digital money initiatives from the private sector, both from the unregulated side and the semi-regulated or regulated wannabe side, I should say. And central banks, they feel that they need to do something. They need to have an answer to these private initiatives, and I think that's the major driving force. The other, of course, is that because the other central banks are doing it, then the other ones need to do it as well in order not to be laggards in that setup.
And what about specifically in the Nordics? You've touched on that a little bit already, but do you think it's going to become part of the infrastructure?
Ultimately, yes. So the thing with these public sector initiatives always is that if they decide it will be done, it will be done. Then it's a whole other question whether they will be successful, and that's for everybody to see what's going to happen next. So regulating something into existence, like we also discussed on the panel, might have negative impacts in terms of what actually is going to get built on top of that. However, I think what we're seeing, the central banks opening up to the private sector to understand what are the needs and how should this be constructed in a way that is actually beneficial for all the parties, including commercial banks that I'm representing. So will it become a part of the infrastructure? Yes, it will. Will it be successful? We will see.
All right, well, following on from that then, it's worth noting some of those challenges that were highlighted today. So run us through that, things like crime, regulation and so on.
So there's a lot of pressure for central banks to create a cash equivalent in the digital world. This comes, of course, with a lot of challenges. So if you think about a physical cash notes, I mean, you don't have your name on it. You can exchange it without exchanging identity information beyond seeing each other. Now, how do people, if we want to replicate that in the digital world, it comes up with an array of problems. So if you are creating an anonymous, well, almost like an independent digital token, if that gets distributed across the world without any control, that is obviously a big problem because digital currency is easier to stack than physical currency in a way. So there's a lot of financial crime risks related to those things. So embedding these rules and regulations that we have already created for the digital payments ecosystem also into the CBDC space is exactly the conversation that we're having now. How do you create a privacy protecting way of interacting with the central bank digital currency without it being completely anonymous? So again, that's one of the points we talked about on the panel. You can have private money or privacy enabled money, but it doesn't need to be anonymous. So I think this conversation moving away from a completely anonymous into private is one of the more important ones, and I think that's also one of the major possible pitfalls of these initiatives.
Sure, it's going to be really interesting to see how the industry navigates those challenges, but we'll leave it there for now. We could carry on talking about this forever, but thank you very much. I'll let you get back to the event.
Yeah, thank you.